two different calls versus the description I just heard. So it's absolutely true that the reported number was slower, but you've got to factor in currency. You've got to factor in the driver appreciation award that Uber awarded that drivers that came in as a contra revenue item. When you do that, revenue actually increased 26% year over year. You saw contribution profit turn back to profitability and come in meaningfully above street expectations. So yes, you can look at that headline number, but you've got to fix some messy items during the quarter. When you do that, you see a market that's rationalizing and a faster timeline toward profitability. And that's what gives us more confidence that Uber can trade higher.
And real quick, and then I want to get to Steve, how do you think about Uber relative to Lyft, though?
Yeah, I would say that Lyft, on the very short term, is the cleaner story. It's a one-dimensional company, strictly transportation, strictly North America. Whereas to the earlier comment, Uber is a global company. It's competing against many companies in the food sharing and ride sharing business. So we think Lyft probably performs better over the next 6 months. Uber probably better over the next 12 to 18.
Hey, Steve, when do you think this can be a profitable company?
I think it's going to take at least several years. The company is still in investment mode. I said this last time I was on the show that comparing Lyft and Uber is sort of apples and oranges right now. Uber is still in investment mode. They're investing in Uber Health, Uber Freight, micromobility, autonomous vehicles, even Uber Elevate, which is flying VTOL cars. A lot of this is still, the groundwork is being laid out right now. And so when you're comparing growth rates, first, there's a law of large numbers. Number two, what you're seeing right now is a complexity of the business that, quite frankly, in the short term, may look very different from Lyft and some of the other competitors. But long term, I think they're setting down the groundwork for future growth. So I think it's going to be a few years out at least.
Steve, but when you look at some of the locations globally that Uber's playing in, and you see the number, and I guess this was true before, but you look at what's happening in Latin America with the competition with Didi, for example, are there markets? I mean, when there really is a significant competitor in a market with Uber, it becomes a very tough business.
And number one, keep in mind that they have a double-digit ownership in Didi from the Uber China sale.
Right.
Number two, I mean, Didi is probably the most comparable company out there globally in terms of market share, in terms of global reach. But Uber is still by far the largest expanse in terms of global reach. And when you think about ride sharing for Uber, that's really the logistical network that goes in first and pioneers a region. And then Uber Eats, Uber Freight, Uber Health, micromobility can all roll into those regions in those networks. So keep in mind that we're still in the very beginning globally, as well as in vertical products for Uber, whereas a lot of the competitors, whether it be food delivery or whether it be ride sharing, are sort of one-dimensional products that are competing with different sections of Uber around the world.